What's up, YouTube? This is Novadollar Investment back with another video, and the market has been kicking our tails. Yes, we are down 7% for this week. We're down $759 for the week. This is madness. However, as I said before, you never invest money you can't afford to lose, right? Because when you do that, you become emotional, and then you start making silly mistakes in the market. Obviously, within reason, the market is not down that much. People are talking about crash, recession, 2018, or sorry, 2008, 2022. Like, what are we talking about here? The market is only down 2%. The S&P 500, sorry, is down 2%. There has been some news coming out from the Fed with potential interest rates cuts coming in September. We'll see how that plays out. However, markets can't go down forever, right? So we're here to hold and hold and hold and hold until things recover, right? I don't care if we go to freaking zero. I'm gonna hold on, right? So rest assured, you best believe that we're not going anywhere. So let's take a look at the portfolio's performance. So over the past week, as I've stated, we're down $759, and that accounts to 4% of our account. As you can see, the S&P 500 during that time, VU is only down 2%. Look, right now it looks like it'll be a better decision to take everything in this account and put it in VU. Reason why is because if you look at the performance, even though it's down, it's still beating our overall portfolio, right? So one might say, well, look, it's so hard to beat the S&P 500, it's so hard to beat the market. Why not just put your money in the standard market and just let it ride? And that's what the bogglehead crowd tends to preach, which I do not disagree with. However, I feel that I can outperform the S&P 500 over time with my portfolio structure. So let's take a look at the monthly performance, and let's see how we're doing there. So on the month, we are down $1,383, and so that's madness, right? That's nuts. Sheesh, right? No biggie there. Last 3 months, we're losing again. We're down $620. And then for the year-to-date number, we are actually down $313 as it is. So a lot of loss going on in the market. Don't mind this number here. Remember, we withdraw some money out of the account, so our numbers are skewed. But if you look at probably from the 3-month mark, that's more accurate. We're down 1% in the account. Yes, the money looks significant. $600 is it's not a lot of money, obviously, relative to the account size. However, if you're not inexperienced and you're investing with money that you can't afford to lose, then you might panic and say, "Oh, this is too much. I'm done. I'm done with this. I'm going to put my money into real estate or a CD or a high yield savings account or something conservative like that." But hey, no pain, no gain, right? So my pain level when it comes to my gain pain level is really high, so I can tolerate these fairly not too large drawdown, but might seem significant based on how folks are reacting to the market's performance. And then so let's take a look at some of the holdings in the portfolio. I'm not going to go over every single stock within the portfolio. However, I'm going to go over the best performers for the month and then the worst performer for the month, right? So let's take a look. So the best performer for the month of July was Lowe. As you can see, Lowe's up 13% for the quarter, for the month, and that's not bad at all. But my plan is to dollar cost average into everything that you see that you're looking at in this account over time. So if you haven't been here before, the basic strategy of this account is to grow it exponentially, and then so the plan is to every single vehicle within this account, every single stock or ETF or index. The plan is to dollar cost average into these stocks over time. So low is our biggest gainer for the month. And then for the worst, let's take a look. Ooh. For the month, Amat Applied Materials is our worst performer, down 24%, which is a big amount. And then look at Coney. So yes, I bought into the Yield Max High Dividend ETF hype. Yes, right. I want to dip my toes into that as well, so I threw some money in there. Not too much, but just a little bit. So I have Coney and Misty. I think those are the only two high dividend, high income covered call ETFs that I have in this account. So Coney is down 24%. However, right, that doesn't account for the dividends that's been paid this month. So the dividends would offset that number, obviously. However, just the share price, as far as the share price goes, is down 24%. And here are the other holdings. So if you would like to look more in depth, just pause the video and take notes. So as you can see, this account is more geared towards growth. Right, I have a ton of growth stocks in here. Not really dividend focused right now, even though there are some dividends, high income dividend stuff in here, right? A little bit, and then there are some there is some ETFs in here as well. But for the most part, we have a ton of growth stocks in here in the account focus. So let's look at one of my favorite stocks. Is Old Dominion. If you look at, so MarketBeat has an excellent calculator that you can use to research different companies, right? So let's look at Old Dominion real quick. So it allows you to come in here and just start typing. It'll pull up whatever stock you're looking for. If you change this from individual stock to portfolio, you can put how much you want to invest beginning. So let's say you were starting off with a $100,000 portfolio, right? The initial dividend yield, as you can see right here, is 0.5%. Highest share price right now is $195 a share for Old Dominion, but it's only paying 0.5% in dividends. The last dividend increase was a 38% increase. So what folks pay attention to when it comes to growth stocks is they look at the dividend and they say, that's too little, or they see a 2% dividend and say, that's too little. I'd rather run to a Yield Max and get 100% or whatnot. Well, as you can see, let's look at ODFL, right? Let's look at ODFL versus a Misty or something like that. So ODFL versus, let's say, Coney. I know Coney hasn't been around that long. Or let's go Misty, because Misty is probably better. So let's look at the performance, how it compares. Ooh, look at that. So that's why folks really, right? Some folks really like those cover call ETFs, because even though sometimes the share price tend to not increase, right? The NAVs tend to go sideways or not increase significantly. You're still bringing in that dividends and you're still compounding, as opposed to something like ODFL, where, right, it's in the future, long term it looks good. However, you're gonna sit through. It doesn't pay as high a dividend. You're gonna sit through a lot of game pain just to see the end result. But if you take a look at 20 years in the future, right? If it continues with this 38% increase annually, let's be more conservative. Let's go down to. Let's be more conservative. Let's go down to a 17% increase, right? I think that's more conservative. I think that's better, right? So over 20 years, right? Over 20 years, as you can see, your account will grow within the first 5 years to $197,000 a share, or sorry, $197 in value. That brings you $1,000 in dividends. But let's fast forward to 20 years. 20 years later, your account will be sitting at $855,000, right? Your new balance, right? And then you'll be getting $50 a share. or sorry, $50,000 annually in dividends. Oh my goodness, I'm messing this thing up. And then Main, let's take a look at Main. Main Street Capital. So, like I said, change this to portfolio. So because I want to work off the I rather work off the portfolio starting principal as opposed to shares. Right around 18%. So let's say if we continue with this 5% dividend yield and the 18% expected growth, right? I'm being real conservative when it comes to share price appreciation. I'm only doing 3%, but mostly, if you look at pay attention to Main's share price increase, it's significantly higher than that over time. But let's go 3% for the next 20 years. So for the next 20 years, at 3%, as you can see, our ending balance would be 18 million, and our annual dividends will be 23 million. Obviously, all this has to make it through those 20 years, right? No dividend cuts or dividend decreases, and that's say. Oh, let's take off the annual contribution because we're not contributing anything. We're just putting $100,000 in here and letting it run. Obviously, it pays a monthly dividend. It accounts the market beat dividend calculator accounts for all this, as you can see. So it tells you it inputs automatically the dividend yield. It also puts in the expected dividend amount increase. Obviously, it might be lower than that, but you can do a quick Google search and find out what it is and put the accurate number in there. Same thing with the expected share price appreciation. You can put that in there manually as well. And then just hit calculate, and it'll calculate it for you. So, it says 20-year hold, right? 20-year hold. Here's what the account would be sitting at when it's all said and done if everything stays the same. So, you'll be looking at 17 million per year in dividend, right? Just relaxing and collecting that dividend, retiring somewhere in Thailand or something, on the beach or whatnot. So obviously, a lot will have to go well for that to happen. I wouldn't take all your money and put it in one stock, obviously, right? That's stupid. All right, that's silly. However, with good diversification, dollar cost averaging, you can get to your goal. Like they say, time in the market is more important than timing the market, and that's certainly true. So just two calculators that I would suggest that you guys use while doing your researches, the drip returns calculator and the dividend calculator by Market Beat, and you're on your way. So let's take a look at our dividend tracker here. So year to date, our income is $1,300, and then our monthly average is $193 per month. Ooh, that's nice, right? I could pay something, right? Probably a phone bill or something like that. Who knows? August income coming up is going to be $183, and then when it's all said and done for the year, we'll be sitting at $2,000 in dividends for the year, which is pretty nice, pretty okay. That's before taxes out, obviously. And then if you look at our payouts forecast for August, so for August, first week of August, we're bringing in $145. That's the bulk of our dividends, right? And that's because obviously Coney and Misty is driving that. Obviously, you can see that JetQ sitting in there as well, and then all the way down till the last month, right? And then you can see the total there, $183 in dividends. So that's not bad, right? That's not bad for the month. But hey, that's the portfolio. Market's doing bad. Don't panic. Don't panic, guys. This happens. I mean, I've been in this market for a long time. I've been through the 2008 housing collapse. I've been through the COVID situation, right? Been through the 2022 similar events where folks are panicking. Listen. Things were this stressful even during the 2018, right? 2019, like during the China trade wars and so on and so forth. Where every day you wake up, the market is either red or down or up, and then a tweet will come. The market will be red. A tweet will come out via Twitter, and then the market will be green. And listen, and then the government shut down and all that different stuff that happened. People tend to forget that. You don't just sit here and make money every day, right, green, without going through some pain to get to your goal. There's going to be some game pain and so on and so forth. So relax, stick to the plan, keep dollar cost investing if you're actually doing something similar, and look at the bigger picture, and don't panic, and run. If you don't sell, you don't lose money, right? The market's going to come back. Relax. This is Nova Dollar Investment. Please like the video. Hey, listen, folks have been watching the video but not liking it. Like the video. It helps with the algorithm or whatnot. I'm not getting paid to do this. I'm not trying to get paid. I'm just documenting my journey and trying to show folks how to do this thing, right? In the future, I think my next video I'm gonna do a video of how to set up your account, investment account, for those who have asked questions about how to do this, how to set up an M1 Finance account or Schwab or Vanguard or whatever the case may be, and go over some ETFs and indexes and stocks and the differences and so on and so forth. I think we're going to do that in the future. But for now, please like the video and have a good day. Thank you. Peace.